You may have $100,000 sitting under your mattress. Episode 189. Are you ready to make your law firm a profit-generating machine that will free up your time and skyrocket your impact? With more than 2 decades of business growth experience and having proven that you can be successful while prioritizing your family and your impact, introducing the Profit with Law podcast. I am your host, the creator of the Firm Differentiator 10X Effect, Moshe Amsel. Well, hello and welcome to another episode of the Profit with Law podcast. I'm your host, Moshe Amsel, and today I am going to be taking a break from all of the mindset stuff and the strategy stuff, and we're going to be talking about COVID relief. Now, back in March, April of 2020, I think it was April when the CARES Act was passed, so tail end of March, beginning of April, that's when the PPP program came out, and I did a ton of work to go through, read the bill that was passed, and really help people understand what the PPP program was. And back then, there was a lot of question marks around it. It's gone through many revisions to it. And I think it's time to revisit it. It's a year later, and the program's almost over. But there are some of you that have not taken full advantage of it, and I don't want you to lose that opportunity. So we're going to talk about PPP. The other thing that we're going to talk about is the employee retention credit. This is a lot less known. A lot of people don't know about this, but this can be a lot of money for you in a refundable credit. So essentially, even if you don't pay the taxes in, you get to receive the credit back. So I'm going to cover the employee retention credit as well in this podcast episode. Purpose of this episode is to help you navigate some of the government efforts to stem the bleeding in the economy for the COVID pandemic. And before you discount this episode and turn it off and say, I'm not taking advantage of a government program, I'm not borrowing money. I had a client tell me, I'm against borrowing, so we're not going to be doing this PPP program because you have to borrow money. But essentially, that loan can be forgiven 100%. So essentially, it's, Uncle Sam is willing to write you a check for tens or hundreds of thousands of dollars, and you're saying, I don't need it. Well, maybe you don't, and you certainly are entitled to that. But why don't you hear me out and figure it out for yourself if this makes sense for you? So before I jump into this, let's hear from our sponsors. Let me share an exciting tool that I recently came across that is a game changer for law firms that bill hourly or by the project, otherwise known as flat fee billing. The 2020 Legal Trends Report published by Clio rates how important various items are in a client choosing your firm. You may be surprised to know that the third most important decision factor for someone choosing a lawyer is the ability to pay with a payment plan. The challenge that law firm owners face is the risk of a client not making good on that payment plan. Most attorneys don't offer payment plans because of that. The problem is now solved with LawFunder. LawFunder allows you to easily add a payment option to all your client invoices and retainer replenishment requests that does not require credit checks, applications, or any other complex process. The client's able to use their existing credit cards, allowing them to earn points and miles, access credit card specials on interest rates, and any other tools they use to manage their cash. When I saw this tool, I was blown away. Most importantly, it removes all the risk from the law firm and makes an easy and painless process to the payment process. So if you want to check off the box on one of the top factors in new client decisions, if you want to decrease your accounts receivable and get paid immediately, LawFunder is the solution. Go to lawfunder.com That's lawfundar.com/profit with law to learn more. No buzzwords, no jargon, no BS, just results to make your law firm grow. That's Legalese Marketing. Legalese Marketing is a full-service marketing agency for lawyers by legal experts and digital advertising specialists. Their goal? To help your firm stand out in a competitive marketplace with personalized solutions to help your law firm attract the clients you want, backed by the systems to make it all work correctly. Visit profitwithlaw.com/legalese to learn more. This podcast episode is sponsored by Noda, powered by M&T Bank. You went to law school to be a lawyer, not an accountant. Take advantage of Noda, a no-cost IOLTA management tool that helps solo and small law firms track client funds down to the penny. Enjoy peace of mind with one-click reconciliation, automated transaction alerts, and real-time bank data. Visit trustnoda.com to learn more. Terms and conditions may apply. All right, and we are back. So let's talk about first what happened. The PPP program was issued in 2 rounds. So there was round 1 and there was round 2 of PPP. It's intended to help us keep our employees paid. Now, the PPP program in the first iteration was intended to help even sole proprietors. So even if you are a solo, even if you're working for yourself, you're a Schedule C filer, it was supposed to cover your income. The problem is that most Schedule C many Schedule C filers have done a really good job in either spending all the money that they made or playing with tax loopholes and doing things smart so that they lowered their net income, lowered their taxable income to the point where they were not paying that much in taxes. Now the problem is that you were able to use a salary of up to $100,000, but for Schedule C filers, it was based on your net income. And if your net income was below $100,000, you had to use the net income number. So for many Schedule C filers, the PPP program was significantly reduced because of that. As a matter of fact, people who were showing an operating loss on their tax return in 2019 were unable to file for PPP at all for themselves. Now, if they had employees on staff, then they were able to apply for the PPP for their staff, but still not for themselves. Now, our S-Corp filers had a different issue, and that is you're paying yourself on payroll, and you rightfully have done a reasonable compensation analysis, and you're limiting your payroll to a certain amount, and therefore you were only able to pay yourself based on the payroll that you were paying yourself. However, because you're on payroll, that also meant that you at least were eligible for PPP for the amount of that payroll that you were paying yourself. So a lot has changed since the first PPP program came out. I don't want to revisit the details of the first program, but there is one key point I do want to revisit, and that is the President Biden has basically made some clarifications to the first round of PPP in the tail end of February 2021. One of the clarifications that he made is that for a Schedule C filer, so it's anybody with a sole proprietor, a single member LLC that has not elected to be treated as an S-Corp, anybody who's receiving 1099 income and therefore has to file Schedule C, anybody in that bracket, that category, can use their gross wages rather than their net income, as their income up to that $100,000 mark. So if you brought in $100,000 in revenue and then you had $100,000 in expenses and your net income was zero, prior to that clarification, you were not eligible for PPP at all. However, with that clarification, you are now eligible for PPP based on $100,000 of salary to yourself, even for round 1 PPP. Now, the PPP program ends March 31st. So from the time that this is being released, you have 2 weeks, approximately 2 weeks, to get your application in and to get that funding. Now, here's another complication. Round 1 PPP has to be completed before round 2 can be funded. So the problem is that if you're first applying for round 1 PPP now and you have 8 to 24 weeks to use it, you in theory cannot start round 2 PPP until 8 weeks from when you get funded with round 1, which is going to put you past the March 31st deadline. I'm going to share with you something that I don't know if your lender will be willing to do, but technically this is a way to get around that. If you're first doing round 1 PPP now, put in your application for round 1 PPP. As soon as you get funded, put in your application for round 2 of PPP before the March 31st deadline. If the round 2 gets approved, ask the lender to hold the funds. They don't actually need to disperse the funds to you. It just needs to be applied for and approved before March 31st. If the lender holds the funds for you, it does not disperse the loan to you until after your 8-week period is over and you have used the first round of PPP. Then you can receive the funds for the second round without a problem. So that's how you can work around that. Now let's talk about round 2 of PPP. So in round 2, there was a new qualification added, and that new qualification, well, there's a few, and I'm going to ignore the employee size. So I'm assuming that 98% of my listener base has a law firm with less than 100 employees. If you're more than 100 employees, some of these various things I'm going to discuss have different rules based on 100, 300, or 500 employees. So I'm just going to assume everybody's under 100. If you're more than 100, definitely make sure you review the rules and that you meet whatever those requirements are. So in round 2 of PPP, there was a new requirement, and you had to have a reduction in income from one quarter to the next. Now, here is how that works. It has to be calendar quarter to calendar quarter, and it has to be the same quarter. So what happens is you look at, and this is based on your gross revenue, so you look at your revenue collected in Q1 of 2020, compare it to Q1 of 2019. If there was a reduction of 25% in revenue from Q1 2019 to Q1 2020, then you meet the criteria. Now you do that for Q2, Q3, Q4. All you got to do is find one quarter that has a 25% reduction. Now, just one thing to note when you're doing this is when you're applying, the lender is going to ask you to give the highest reduction. In other words, the worst quarter-to-quarter decline. So you want to actually run the numbers for all your quarters. Now, if you're using something like QuickBooks, this is very easy to do because you can run a profit and loss statement. And in the profit and loss statement report, you can set it to, instead of reporting it yearly, you can set it to report or totals only. You could set it to report quarterly. So it's going to create columns for every quarter. And then you can also tell it to compare to the previous year. So you can have percentage selected and you can have dollar amount selected. So essentially, if you set it to quarterly and then you set it to compare to the previous year with a percentage, it will just calculate that for you right there on the report. There's nothing for you to do except look at that percentage number and look for anything above 25%. Let me share an exciting tool that I recently came across that is a game changer for law firms that bill hourly or by the project, otherwise known as flat fee billing. The 2020 Legal Trends Report published by Clio rates how important various items are in a client choosing your firm. You may be surprised to know that the third most important decision factor for someone choosing a lawyer is the ability to pay with a payment plan. The challenge that law firm owners face is the risk of a client not making good on that payment plan. Most attorneys don't offer payment plans because of that. The problem is now solved with LawFunder. LawFunder allows you to easily add a payment option to all your client invoices and retainer replenishment requests that does not require credit checks, applications, or any other complex process. The client's able to use their existing credit cards, allowing them to earn points and miles, access credit card specials on interest rates, and any other tools they use to manage their cash. When I saw this tool, I was blown away. Most importantly, it removes all the risk from the law firm and makes an easy and painless process to the payment process. So if you want to check off the box on one of the top factors in new client decisions, if you want to decrease your accounts receivable and get paid immediately, LawFunder is the solution. Go to lawfunder.com. That's lawfundar.com/profitwithlaw to learn more. No buzzwords, no jargon, no BS, just results to make your law firm grow. That's Legalese Marketing. Legalese Marketing is a full-service marketing agency for lawyers by legal experts and digital advertising specialists. Their goal? To help your firm stand out in a competitive marketplace with personalized solutions to help your law firm attract the clients you want, backed by the systems to make it all work correctly. Visit profitwithlaw.com/legalese to learn more. This podcast episode is sponsored by Noda, powered by M&T Bank. You went to law school to be a lawyer, not an accountant. Take advantage of Noda, a no-cost IOLTA management tool that helps solo and small law firms track client funds down to the penny. Enjoy peace of mind with one-click reconciliation, automated transaction alerts, and real-time bank data. Visit trustnoda.com to learn more. Terms and conditions may apply. If you have a decline in any one of those 4 quarters of 25%, you meet the criteria and you are eligible to apply for round 2 of PPP. Now, going back to the sole proprietor and the $100,000 and using your revenue instead of your profit, you cannot retroactively alter a PPP that was already applied for. So if you used round 1 and you calculated it based on your net income and you only had $20,000 of profit, it's too bad. You lost out. However, for your round 2 calculation, you get a fresh start. You can use your revenue instead of your profit as your compensation number when you're doing your round 2 PPP. So that's an important thing to note. That will help some of you get more money in your round 2 PPP loan. Now, we're going to put some links in the show notes for some banks where you can apply. So a lot of people have had some difficulties with their financial institution applying for the PPP. There are a lot of lenders, really good lenders, that have a streamlined application process that you can apply with. We're going to link some of those up in the show notes. Now, one of the things that you might want to know is, hey, if I haven't got my first round PPP forgiven yet, can I apply for my second round? Yes, the forgiveness has nothing to do with the PPP application. However, you do have to have completed the period of time for using the funds of your first round in order to receive the second round, like I discussed earlier in the episode. So the period for you to use it is from 8 to 24 weeks. So you can use it as quickly as 8 weeks, or you can drag it out as long as 24 weeks. You want to make sure those periods do not overlap. The last thing is that a lot of lenders sit on applications. They get stuck on technicalities. And one of the questions that people have asked is, can I apply at more than one lender? Now, there are some people who will tell you if you apply at more than one lender, it's going to screw up your application process. It's going to cause problems for you on the SBA side. I don't believe that is true. I have heard from enough sources directly in the lending institutions saying apply to as many lenders as you want. Only one of them will get approved, and this way you don't put all your eggs in one basket and wait on one lender who may never get your application through. So you want to make sure that you apply at multiple lenders when you're trying to get this application approved. So that is basically it for PPP. Hopefully, I clarified some things for you, brought to you some of the changes that you might not have known about, and you might have been sitting, like myself. I actually was delaying the second round PPP application because I didn't know all the rules. I was too busy with our law firm growth summit to be focused on that. But ultimately, I was able to determine whether or not I was eligible for second round PPP, and I was able to get that application in, and now I'm just waiting for that to be turned around and come back to me. There was a 2-week window that the PPP was reserved specifically for really small businesses of 20 employees or less. That window has already passed, so that's why I didn't discuss it in the beginning, but just in case you're wondering about that, that's already gone. At this point, you just put the application in, you go into the regular pool. However, I don't believe that the funds have been exhausted, so there's no reason why you shouldn't be approved and be able to get access to those funds. Now, PPP, in case you don't know, it's a loan that you are borrowing, and then there is a forgiveness process where you apply for forgiveness based on using the loan proceeds appropriately for payroll and other costs. And by the way, one of the changes that was made is the costs that you can use it for has been expanded. So I believe that now in the second round of PPP, you can also use the funds for routine operating costs as well. And that is a valid cost. And payroll only needs to be 60% of the total cost. So you could easily use the funds in 8 weeks and not have to drag it over the 24-week period and then apply for forgiveness and move on your merry way. And you're about to find out about the employee retention credit that I'm going to share with you. And that is going to be a reason why you do want to expedite how quickly you use up your PPP funds, because you don't want to use them all on payroll. So what the heck is this employee retention credit, and why have you not heard of it? Well, let me tell you something. In the CARES Act in March of 2020, there was the PPP loan. And then in, which act was it? That the COVID relief law that was enacted December 27, 2020. But what was the name of that? The Taxpayer Certainty and Disaster Tax Relief Act of 2020. So the Employee Retention Tax Credit was actually enacted with the CARES Act. But then in that first version, it basically said that you had to do either or. In other words, you can either use the Employee Retention Credit or you can do PPP. Now, PPP was far better than the Employee Retention Credit, which I'm going to explain to you in a second what it is. And everybody chose PPP over the Employee Retention Credit, and basically nobody looked into the Employee Retention Credit. Well, when the Taxpayer Certainty and Disaster Tax Relief Act of 2020 was enacted on December 27th of 2020, there was a major change in there to the Employee Retention Credit. And that major change was that you could still not use the Employee Retention Credit for any funds, any wages that were paid using PPP money. However, any wages that were paid that was not using PPP money, you could apply the Employee Retention Credit to. So what is the Employee Retention Credit? How does it work? And how do you get access to it? So the first thing to know is that there is a difference between 2020 and 2021. So the Employee Retention Credit for 2020 is limited to 50% of the wages of your employees up to $10,000 for the entire year. Now, you have to have either had a government order fully or partially suspend your operations during a calendar quarter due to COVID-19. And by the way, you have a high likelihood that you suffered this problem. You don't need to stretch the imagination very far to see that you have probably suffered, at least in one calendar quarter, some sort of fully or partially suspended operation. I mean, even if you couldn't travel to clients, or court was closed, or anything like that where it affected your ability to do business, would meet that eligibility criteria. If you don't meet that criteria, then you could also use a gross receipts for a calendar quarter compared to a calendar quarter in 2019. So when you look quarter to quarter, 2019 to 2020, you have to have had a reduction of 50% of your gross receipts from one quarter to the next in order to become eligible for the employee retention credit. And once your gross receipts exceed 80% of the gross receipts from the same quarter of the previous year, you lose the employee retention credit. However, that limit is only if you're using the gross receipts method to determine your eligibility for the credit. If you meet the fully or partially suspended operations due to a government orders for COVID-19, then you don't need to worry about the gross receipts at all. And now we're talking about fewer than 100 employees. All your employee wages qualify for the credit during the period of the suspension order, or if you're using the gross receipts test for the entire quarter. So like I said, the maximum creditable wage is $10,000 per employee for the entire calendar year. And wages includes the value of health benefits that you pay on behalf of your employee. Now, one of the main differences, like I said, is the ability to use this around the PPP loan. So if you chose to use the 8-week period for your PPP loan, then you have the rest of the year to look at your employee's income and take this 50% credit. Now, what's really cool is that this credit is applied to your Social Security portion of your employee's wages, which is 6.2%. So clearly, you're probably not going to have 6.2%. You're probably not going to have $10,000 of per employee of Social Security wages that you're responsible for. Therefore, you might be thinking, well, great that it's up to $10,000, but I'm not going to be eligible for all of it. Well, it is a refundable credit, which means that it starts off reducing your Social Security liability. But if there's more funds available in this credit and you've already got your Social Security liability to $0, you get a check back. You get a refund. Now, this gets filed in your Form 941. That's the quarterly filing form for payroll taxes. And basically, you can get this retroactively. So you can file an amended 941. It's a 941X for any quarter where you're eligible for this credit, and you can get this refunded now. You can go today and you can file amended 941Xs for any quarter or all quarters in 2020, and you can get these credits back for wages that were paid in 2020. Now, here's the cool thing. In 2021, now it was extended for 2 quarters, so Q1, Q2 in 2021. And I'm not sure if the new bill that was just passed by President Biden extends it even further than that. It's possible it does. But in the legislation at the end of December, it was extended for the first 2 quarters of 2021. And there it made it up to 70%. As a result of the new legislation, eligible employers can now claim a refundable tax credit against the employer's share of Social Security tax equal to 70% of the qualified wages they pay to employees after December 31, 2020 through June 30, 2021. Qualified wages are limited to $10,000 per employee per calendar quarter in 2021. Therefore, the maximum ERC amount available is $7,000 per employee per calendar quarter for a total of $14,000 per employee in 2021. So this could be huge. I mean, if you have a staff of 4, if you have a staff of 10, with a staff of 10, that's $140,000 that you're most likely eligible for. You probably are paying your people enough that you get the maximum, and you can have $140,000 coming back to you for Q1 and Q2. Now, the IRS has also released a form 7200 that allows you to request for this credit to be paid back to you in advance. So you can essentially file this form 7200, before you pay payroll and get the money back from the IRS. It's pretty wild. So this is something that I shouldn't say nobody, but most business owners don't know that this exists. And by not knowing, you're essentially going to be leaving money on the table. Now, it is important that you make sure you meet the criteria and therefore are eligible to claim the credit. And you also want to be careful to work around the PPP. Now, this is where some real good planning comes into play, because the PPP allows you to use only you can use 100% of the PPP for payroll. However, it might not make sense for you to do that. It might make sense for you to actually choose to only use 60% of your PPP funds for payroll, use a shorter payroll cycle, a shorter time frame that you're covering payroll with it, and expand the time frame, expand the other expenses that are allowed through the PPP to get full forgiveness on your PPP, and yet still have more time eligible for for this credit. You'll also want to look at the timing of when you apply for the PPP. Now, at this point, it's a little bit late, but hopefully you got the PPP mid-quarter. So you want overlapping quarters, so you can have this 8-week period go from 4 weeks in one quarter, 4 weeks in another quarter, or 6 and 2, 6 and 3, whatever it works out to be, so that you have enough payroll still left in the quarter, so you're not losing the eligibility. This is especially if you're doing second round PPP now in Q1, Q2 of 2021. So I know this is a little bit confusing. I might have thrown you for a loop there, but understand that with a little bit of planning on how you go ahead and apply for forgiveness, you can try to maximize your credit for the employee retention credit, while at the same time getting full forgiveness for your PPP. And if you need help with this, you definitely want to talk to your accountant. If your accountant is proving to be useless in regards to this, definitely reach out to me. I'll put my email in the show notes, and we'll see if we can help you here. But at this point, time is running out for the PPP program, and you want to make sure that you get that application in right away if you're still planning on taking advantage of PPP round 1 or round 2. The employee retention credit, because it's an amended return, you have a lot more time frame to go ahead and claim that. However, depending on your situation, you may have a lot of money sitting there that could be really useful to have in the bank, as opposed to letting it sit to collect it someday somehow. So you definitely want to make sure that you're taking advantage of that. And by the way, because it's a payroll form, because it's a Form 941 that this is claimed on, very often it's not going to be your regular accountant that's handling it if you have a separate payroll services company. So, for example, if you're using ADP, if you're using Gusto, if you're using Paychex, a lot of times they are filing your Form 941 for you. You want to go to your payroll processing company and find out if they will take care of applying for this credit for you. Now, one thing to be careful about is that they may not be able to navigate the difference that when you use your PPP funds and get that to be used properly for you. In other words, they might not be able to navigate when you've used your PPP funds, and therefore make sure that you're within the right calculations for your employee retention credit. And therefore, they might require you to do it yourself. So just talk to your payroll company, talk to your accountant, and figure out who is going to be doing it, and make sure that it gets done for you. And that's basically it. So check out the show notes. We'll link some stuff up in there. And if you have any questions, shoot me an email. Happy to try to answer any of those questions for you. Maybe if I get enough questions, we'll do a quick emergency Q&A FAQ podcast for you. But otherwise, we've got another great interview coming your way this Thursday. I'm excited to see what's going to happen this week for you. Thank you so much for tuning in. Have a wonderful day. Have you been enjoying the show? We sure hope so. To make sure you never miss an episode, be sure to hit the subscribe button in your podcast player app. Next week, we will be back with more valuable resources and ideas on how to break the mold and take your law firm to the next level.